Joining me now is Macro Mavens President Stephanie Pomboy. Stephanie, you've been talking about credit issues for a long time, and here we are seeing two major situations with First Brands and Tricolor. What's your reaction, and how bad does this get, in your view?
Well, I am going to quote the illustrious Jim Grant, and he had a great line about this, and he said, there's a lot of mischief around 0%. And that's what we're seeing now, is the fruits of this outsized accommodation, the financial repression that took place all the way up until the Fed started raising rates in 2022, that basically afforded companies that never should have existed in the first place access to free money. And then when the Fed started raising rates, I started sounding the alarm bells, as you know, that this was going to be a problem because people who borrowed around 0% weren't going to be able to service the debt as those rates moved back to something more normal. So, for example, in the junk space, interest rates have doubled from where they were prior. So, you know, if you were borrowing at 4 and you're rolling your paper at 8, you have a problem, especially if you're not generating earnings. So I think these auto companies, obviously, you know, the subprime auto space was the weakest link in sort of the consumer credit chain. So it's not surprising that that one's breaking first. But I would caution anyone who's describing this situation as, to borrow Bernanke's phrase, isolated and contained, because it certainly isn't. These problems are not unique to the subprime auto space. The access to cheap credit was provided to everyone, and everyone took advantage. And we're going to find a lot of weak links are breaking. There's a lot of vulnerability in this system. So I think we're just at the beginning phase of this. And you and I have talked about this prior, Maria, that we saw this huge wave of corporate bankruptcy filings, including names people were familiar with, like Saks and Hooters, et cetera. Yeah. And the markets kind of blew it off. And I think that, you know, that was in part because they expected once the Fed cut rates, everyone would get relief. And we're seeing the opposite is the case. The Fed has cut rates, but corporate borrowing costs haven't come down appreciably, certainly not enough to alleviate the stress from these higher, the higher debt service.
But I'm wondering if this is isolated to those banks that have the exposure to the auto parts and auto lenders, because I spoke with Jim DeMar yesterday. You know, he ran global markets, runs global markets at Bank of America. Now he's the co-president, and he said, no, sure, we did, you know, have a loan to one of these players, but it's not significant and not sustainable. Jim DeMar was pretty calm about this whole thing. Do you think this spreads to the larger banks as well? Are you talking about a specific subset of the banking sector?
Well, I guess, you know, the banks in general have exposure to private credit. It's not massive, and it does vary depending on, you know, specific banks, and seems more focused in the regional bank space. And that's largely because these guys were desperate to compete. You know, you saw this post-GFC, the banking regulations sort of curtailed the commercial bank lending, and private credit mushroomed in that vacuum. And now the banks are saying, hey, we want to get back into, you know, don't take our market share, we're going to compete. And the weaker players were the most aggressive in that. But I would caution against, you know, dismissing this as not important. You know, commercial banks are still sitting on $400 billion in unrealized losses on treasuries and agencies. So the last thing they need is losses on any exposure to, you know, these corporate credits. So I think we're just at the early phases of this.
Then there's China, and President Trump told me yesterday that this threat of 100% tariff on China stacked on top of the other tariffs is not sustainable, and the comments moved markets. Here's what the president told me about this yesterday. Watch.
Well, if you put that 100% tariff on top of what's in place already, you're talking about 157% tariff on China. Can that stand?
No.
I mean, what is that going to do to the economy?
It's not sustainable, but that's what the number is. It's probably not, you know, it could stand, but they forced me to do that. I think we're going to do fine with China. I get along great with him. He's a very strong leader, a very, you know, amazing man. And you look at what he's done and what he's, you know, where his life is an amazing story. It's a story for a great movie. I think we're going to be fine with China.
Stephanie, President Trump is walking a real fine line with communist China because they're trying to tighten the screws on America and the world, by the way, trying to undermine the U.S. And, you know, we can push back, but we can't push back too much because we're very reliant on the supply chains there. The president is trying to change that. He said pharmaceuticals are coming back, semiconductors are coming back. He told me all about it yesterday, and it will be on Sunday, on Sunday Morning Futures. This is an important move that he's making in terms of getting supply chains to America. What's your sense of the U.S.-China trade conflict?
Well, I think he's so on the right course here. We absolutely have to reduce our reliance on China. That was evident certainly during COVID. And so I have great confidence in the president's ability to navigate this the trade war with China. I think he's right that we have a much better hand to play. So that's not something that keeps me up at night. Maybe I'll regret saying that, but I do think the president has proven to be a tremendous negotiator, the art of the deal. So I'm much more concerned about the issues we talked about prior as relates to, a forthcoming credit bust and the access to credit arising from that. But I have confidence the president is going to navigate this trade war, and we're not going to end up having those enormous tariffs. China will come to the table.
All right, we will leave it there, and we'll be watching this potential credit bust. Stephanie, we're seeing these markets react, certainly in the banking sector. Good to see you this morning. Stephanie Pomboy, Macro Mavens. We'll be right back.